Victor Adair joins me on the line right now, live from the trading desk. Victor, what a great start to the year. I mean, so much happening.
Yeah, Mike, to get right to the point here, we had stocks, crude oil, and interest rates all sharply higher here the past couple of weeks, while the U.S. dollar sharply lower. Gold has jumped about $100 from where it was 5 weeks ago. And, Mike, it was really good to hear my old friend Peter Grandich there talking, giving you his view on things. And I think part of it with this awesome level of momentum that we have in the market is what he was saying about FOMO. You know, this fear of missing out. That I mean, I look at it to me, you know, in my let me see, my nature. I look at this kind of rush like this, and I really want to fade it. In other words, I want to say, sold to you. But my risk management says, wait a second, you got to step back. You know, as we were talking about Bob Farrell last week, when these markets get ripping to the upside like this, you have no idea how far they're going to go. It's an amazing show, that's for sure.
Well, I love Farrell's thing that says the public buys most at the top and least at the bottom.
Yeah. Well, hey, let me give you a couple of stats. Here's a couple of things that people might not know. Go to interest rates, for instance. The yield on the 2-year U.S. Treasury is now at 2%, okay? But that's a 10-year high. From 2010 to 2016, that yield was mostly below 1%. And to put that in perspective, back in 2007, you know, back before we had color television, that seems like a long time ago, the yield on the 2-year was about 5%. We've got the interest, the yield, I should say, on the 2-year Treasury is now above the yield, the dividend yield on the S&P 500. You know, there's just a number of things that are churning below the surface here in this market, but what obviously catches everybody's eye is just things are racing. We're making new highs all the time. I heard you and Michael talking about Amazon. You know, Amazon's up 11% since the year started. We only had 9 trading days so far this year. There's incredible momentum out there, and it seems, as Peter Grandich was saying, it seems this is probably, you know, a little too good to be true, but you know, it's hard to step in front of it.
Well, the other one that really catches my eye is the euro. I mean, what is it, up 16% from the dollar from, about a year ago? And I don't like a lot that's happening in Europe.
Yeah, well, Mike, let me go right to that point. You're absolutely right. The euro is up 16% from where it was a year ago now. It's at 3-year highs. But the most interesting thing I see about the euro is that the euro is also at a 3-year high against the Swiss franc. Remember on this show a few years back, we were talking about how the Swiss were, you know, desperately trying to keep their currency from rising because all the people from Europe who were scared to death of what they were seeing in their own backyard were bringing their money into Switzerland, you know, and pushing up the Swiss franc. Now, the euro is going up relative to the Swiss. It would imply then that the people of Europe feel as though the political and economic troubles that they have, are past, and that they don't need the safe haven that Switzerland provided.
As you say, the whole year starting with so much movement all around, you know, whether we're talking euro, you mentioned gold, it's up, nearly $100 from that mid-December low. And the other one that keeps grabbing my attention is looking at the rally in crude oil, which, as I say, Joseph Schachter is going to be at the World Outlook Conference doing the whole oil and gas review starting on Friday afternoon. I mean, it's great timing for him, but still, it's been a very impressive run.
Yeah, well, the crude oil, the WTI, let's focus on that, okay? The Western Texas Intermediate is up $5 in the last 2 weeks. That's a 3-year high. WTI, by the way, got to $65. Brent got to $70. But Canadian crude, we talked about this last week. Western Canada Select, our benchmark, is basically trading at around $40. The discount to WTI is huge because we're having trouble moving the crude out of Canada, and the American refiners just don't have the appetite for that. And could I talk about Canadian dollar for just 1 minute, Mike?
Yeah, please do.
Okay. I mean, we got our Achilles heel exposed big time this week. The story came out on Reuters, and it said, you know, from 2 senior Canadian government sources were indicating that they kind of thought that maybe, you know, Trump was going to pull a plug on NAFTA. Well, as you dig deeper into the story, it seems as though the American administration kind of indicated to Canada, just out of politeness or whatever, by the way, we're going to pull the plug. The Canadian dollar fell about a cent on that story when it came out on Reuters. I think we grudgingly had Canada come back on Thursday and Friday after getting hit hard on Wednesday at that news, but Canada only came back because the U.S. dollar was just falling like a stone against everything else. I think we got some real vulnerability here around the NAFTA issue with Canada. I think you got to be, if you got a risk on Canadian dollar, you got to be really careful. This Canadian dollar could get hit with some bad news on NAFTA. We've got the Bank of Canada coming out in a couple of days here, Wednesday this week ahead. The market's pricing a 75% chance that they're going to increase rates by quarter. Relative to the danger that NAFTA or ripping up a NAFTA agreement could do, putting up the interest rates by a quarter would be a small change.
Well, I'm really glad you're bringing that up, though, and you brought it up earlier with the interest rates, those 2-year treasuries being above 2%. I mean, one of the things on this show, and we've made it very clear, the 5,000-year low in interest rates is well over. And it's interesting to see that the market is pricing in. They're giving it about a 75% chance that this coming week we will get another 0.25% bump. We also got a couple of major banks raising their mortgage rate this week, so I think that's a pretty clear sign.
Yeah, the trend is, I should say, has been, one of the trades that Drew has on and some of the money that he manages for me, he's been short the U.S. 10-year note as the yield on that ticks higher. And obviously, so much depends on whether or not interest rates go higher. People that say they can't go higher kind of make the argument there's so much debt out there that if interest rates do go higher, servicing or paying the interest expenses on that will be so big it'll kill the economy and interest rates will come right back down again. Yeah, I kind of see that, but I also see the thing where you look at Germany, for instance. The economy is red hot, okay, technical term. They got negative interest rates out to 2-4 years. It just doesn't make any sense that interest rates are this low because of all the central bank money that's been pushed into the system over the past 8 years.
Well, still also very difficult given that the banking system, the central banks rather, are manipulating the interest rates. But I was just looking at the figures earlier this week, $230 trillion in debt outstanding. So a bump in interest rates will be significant in terms of interest costs, and that's why it's such a double-edged sword there for things. I mean, at some point, our debt's going to come home to roost yet again. But yeah, in the meantime, it's fascinating. But I'm glad you've really brought up that point, so people should be ready for possibly another 0.25 point bump as early as this coming week. Certainly it's on the cards coming soon. Plus the U.S. also promising to raise rates 3 times this year. So the interest rate environment changes, which does, I think, over time have an impact on other markets.
Yeah, Mike, if I could just bottom line, tell you in one sentence what I think right now, it's just amazing, this momentum rush that we've got going on in these various markets. I'm just a little suspicious of it. I don't want to stand in front of it, but I don't think it's going to be sustained either. Come back to Bob Farrell. The public does buy the most at the top and the least at the bottom. I would echo Peter's advice, and that is I'd be a little cautious here. You don't need to short it, but you might want to take some money off the table.
Victor Adair. Victor will be joining me, by the way, at the World Outlook Conference. Looking forward to that. That's February 2nd and 3rd. Your chance to have a chit-chat with him personally, pick his brain for things. He'll be with me there for the whole weekend. Look forward to seeing you there, Vic. And as I say, it's a great time as usual. The beginning of the year has given us lots of ammo to talk about at the World Outlook Conference. And as you know, tons of great analysts joining us there.
Yeah, Mike, I'm looking forward to it. You do have a great lineup of speakers, and almost all of them are good old friends of mine. So I'm really looking forward to seeing them.
There you go, Victor Adair.